Hey guys, I'm Duncan Wilson.
And I'm Sasha Syed, and you're listening to the Mortgage Sweet Spot Podcast, proudly presented to you by Mortgage Suite.
This podcast is your go-to source for expert insights, innovative strategies, and the latest mortgage trends to help you make the most informed decision regarding your mortgage financing. Whether you're a first-time home buyer, a seasoned real estate investor, or maybe somewhere in between, you've come to the right spot.
So sit back, relax, and get ready to discover your mortgage sweet spot.
Hey guys, welcome back to the 29th episode of Mortgage Sweet Spot, which is awesome. Sasha with me to my left, and obviously the producer in the background, Maddie, here also as well. So we're here just to discuss today, obviously home affordability stories, the situation in the market. The biggest question is it out of reach for people to even afford homes these days? And I mean, we can go into details and we'll do some stories in regards to what we've seen in the market. But first things first, Bank of Canada is no longer, adjusting the rate today. The announcement came out. They're not touching the rate, which means prime is staying at 4.95 on the mortgage side. Yep. And the band rate, which is the overnight borrowing rate, is staying at 2.75, I believe, right?
Yes,
so
exactly,
yeah, I thank you for all the affirmative shakes because I just, there's been so many changes. I don't know, you know what I mean? I don't know what's up and down, but obviously with all these changes comes to the question of, did it change for the worst? Did the market come to a point where now is it impossible for homeowners to buy? Is the market, obviously with the slight decrease that we're seeing right now, there's pockets, there's videos online too on YouTube where we're obviously showing this as well, but they went through 10 cities going through massive corrections. The funniest thing is they didn't mention anything to do with Toronto condos, which is just ironic to me that every other city's, getting hit hard, but Toronto's still there, but not really. I have a few clients obviously backing out of contracts in the condo market. So let's look at that affordability. How is it affordable for someone to buy a $950,000 condo before it's built, pay the contractor, obviously the contract to get ownership of this condo. And now it's been 2 years since it's finalized to being built. It's now coming to fruition and the appraisal value comes in at $750,000.
Yeah.
$200,000 short, guys.
I just had that situation like a couple months ago.
Right?
Yeah, the guy came to us. He had been dealing with some other broker in GTA, didn't like it. The fees were too high. That's why he originally came to us. So I started working through his deal. Oh, man, we even got new appraisal. We got appraisals on his property, his rental property. All the values came in lower from what the appraisals were like a little over a year before.
Yeah.
And the condo value plummeted. The guy was like so distraught on the phone. And it's like, there's just nothing we can do, man. That's what happens to the market. So he ended up having 2 condos where he bought before construction.
Yeah.
And like the one condo is like the contract was made 4 years ago.
4 years.
Yeah. Like, why do you do a contract and like 4 years later it's getting built? Don't you know anything can happen? But
I'm assuming they were like, hey, just sign. Is it going to go up? Oh yeah, it'll go up. Just sign here.
Isn't there something about purchasing condos before the construction starts? Like you get some kind of like lower price and then like it's kind of an investment strategy.
It's supposed to be. Historically, it's supposed to have been like, hey, I knew a guy going back, 15 more years ago that bought those contracts and doubled his money on buying those $10,000. He bought 10 of them, $100,000, made $100,000 selling off these condo contracts. Now you can't get rid of them. They're just sitting there with you, and it's a debt laden contract now. So if you look at the market itself with the constriction that's happening with obviously the downturn in the market, the affordability, who has $200,000 to reach into their pockets to get this house? And not only that $200,000 for the short time, for the first 5 years possibly, is just non-existent too. Yeah. It's going into this purchase contract piece of paper. So when you look at that affordability, obviously the market's making that happen, but let's just look at, and let's turn our focus more down to our area, down in Windsor. The average home price is slightly decreasing. And I'll be honest, guys, end of 2023 all the way through 2024 with the higher house prices, you need to make $123,000 to afford a $580,000 house.
Yeah.
Okay. That's just exactly from a deal that I did. And it was a pain in the butt. And because he didn't make 123, he made 118. We had to add co-signers,
yes,
mom and dad.
Yep.
So that's at a regular, brand new, as they call, luxury home being bought during 2023, 2024, where this one individual couldn't even afford it with that high a salary. So now at the $589,000 mark, with houses decreasing right now down to 500, 450, with them bringing back the 30-year AM, it made it literally affordable for just this one deal that was on the cusp. So this guy in today's market would have been able to do it with a 30-year AM because it would have dropped his ratios and he wouldn't have needed, grandma and grandpa to co-sign.
Yeah.
So are we seeing it? I'm happy affordability is kind of within reach. Incomes seem to be kind of keeping pace. They're going up. According to a new market study right now, there's more jobs being created than lost. Yeah. And that's why they're keeping it, according to rumors, allegedly.
Well, they're more part-time jobs. They're not like meaningful, full-time, permanent jobs.
Agreed.
Like high-paying,
Well, I got told also that the way they do those reports for the job report is you could have 4 part-time jobs and they're all counted as one full-time job. Like they're all counted as each separate job, meaning, okay, this guy has 4 separate, or this girl has 4 separate jobs. They're counting as one, not like all together as one full-time, right?
Yeah.
So that's what sucks. Yeah, am I going too confusing there?
No. It's
I said belaboring the point.
You're just being gender. Like that one guy, then you're like, oh, that one girl.
Yeah, they both could have this, and that would mean 8 jobs are being calculated. Is it true? I don't know. I honestly can't see. I could see jobs kind of being stagnant in regards to pay, and with the houses going up in the last 3 years, most incomes did not go up. There's more layoffs, things like that in the market. So affordability may be out of reach at a certain limit. But I've noticed, and for the first time in forever, there's a house being bought for $350,000.
God, I can't even follow that one. That's crazy. Yeah.
So for the first time, I have a purchase from a nice home, nice little neighborhood, situated in a beautiful, beautiful cookie cutter place, nice yard and everything, $350,000.
Yeah. And you know what? On that note, like, here's a little tip for you guys out there looking. Get chatty with your neighbors. Get chatty with your grandparents' neighbors. Get chatty with your aunt and uncle's neighbors, because if you find an elderly neighbor and you have a relationship with them, you might have a good deal there where you can buy a house at face value instead of this list low, sell high kind of market that we're living in right now.
Yeah, and I like this suggestion. Sasha's not saying you dress up as an energy consultant and knock on the door.
Don't do that.
Knock on the door.
Do that.
Maybe you just go over with the fact that Jim and Bob next door, and I just came over to talk to you because it's true.
Bring cookies.
Good idea.
Or brownies.
Bring cookies and brownies. Just not an energy audit suit. You don't want to do that. Okay.
But I think that's a good tip, because that's something that, I've come across where I met this elderly person, that's a neighbor to somebody I know, and we're chatting and stuff, and their kids are all moved out of the country. What are they going to do with their house? At some point, at some point they're not going to be. So if you have the relationship with them, it's like the old car, man, your old neighbor's car, when are you going to sell that old Mustang? Let me know when you're ready to sell it. It's like one of those,
Same thing. I agree. It's almost like if you walk over there, you'd be like, please let me buy your home.
Just let them buy your home.
So you could go over and do that. Another big thing, Sasha's thinking about here too, is talk to your grandparents as well. There's a thing called gifted equity.
Yep.
Meaning that when you go to buy your grandparents' home, you might not have to put down a big down payment. It could be gifted by the grandparent depending on how much money they want for their house.
Yep.
And if the value's higher than they want money-wise, you can gift the difference. I do a lot of those. I do about 2 or 3 a month where we talk to the grandparent or talk to the aunt, talk to the mother and the father, everybody that's involved with the purchase. And they say, okay, we'll gift this amount of equity. Some people don't have to come up with any down payment at all.
Yeah. So I had a client last year where her father passed away, and she was, the executor on the will. There was no contestant from her brother, but she didn't have a job. And she called me and she's like, how am I going to be able to get this out of the will? So house was free and clear. We just went and did a deal with a MIC. Yeah. Equity-based deal. We did prepaid payments for 2 years. You know, she still ended up with 60% equity of the house after paying her debts and all that stuff. She owns her home. And she doesn't have any payments for 2 years. I mean, she's going to have to figure it out. But,
which is the exit, though. But I see what you're saying. Yeah. That helped purchase that home to allow her to Band-Aid the situation. But then she's homeowner. She can figure it out. And she fixes herself up, gets the job, things like that.
Lots of equity still to maybe keep you in for another year or so.
That would be like an estate purchase, too.
That's
pretty cool.
Purchase,
That's pretty cool. But, so just, guys, as much as affordability is a big, big topic, it's like I guess it's the elephant in the room with a big topic. You know what I mean? It's both. It's the elephant in the room. Like, can I afford this? Talk to a mortgage broker. Honestly, subscribe to these videos. We have a bunch of information for the future coming on. We have past episodes going through, I think, gifted equity for sure.
Yeah.
But if you really, truly want to know if you can afford something, nowadays is not the time where you just sit there, you go write an offer willy-nilly, and everything gets done. It's a cutthroat industry right now. People are suing people for not finishing their contracts.
Yes.
I mean, I remember maybe 15 years ago, you got to have a contract just by talking to the person. You can't do that anymore. People are out for blood saying, why did you buy my house? Now I can't sell it for $650. I'm selling it for $600, and they'll come after you for the difference. So buying a house is no longer a weekend scenario where you plan on it on Saturday and Sunday and Monday you put an offer in.
Yeah.
It is more likely a 2-month process. I would even suggest, being a broker and being in this, you're going to suggest the same thing. Come in 6 months ahead of time.
Yeah.
Like plan, guys.
So just to use a car sales analogy, it's 1 year from when a family sits down at the dinner table and says, we need to buy a new car, up until the actual purchase, because they spend that whole time looking and what's my budget and looking what's out there. And we still have a little more saved and what's out there.
Yeah. Unless you find a sick deal on Marketplace, your wife finds you, just buy it the first time you see it. But other than that, I know what you're saying.
But it's the same process. If you're going to do that for a car that costs you 25 grand, I mean, you should be doing that for a house that's costing you, 500 grand. Come and see us. If you're not ready, even if you don't have $1 saved yet, come sit down with us, do a budget, let's look at your budget, and what is it you want to buy in, and what do you have saved, or what do you need to have saved for X amount of time to reach that goal.
Agreed. And it's like a dream to get this house. As a broker, Sasha being a broker here, our dream, your dream, we try and make it reality.
Yeah.
We have numbers that we have to put in place here. We have to make it affordable for you. Is it affordable for you to go buy that house that you want to buy for $1.5 million? I don't think you want to pay $7 grand mortgage payment, but if that's affordable to you and that's your dream, we make them happen, but we can also course correct you and give you different direction. So I would say, all in all, affordability is coming back to the grasp of the Ontarians and an Ontario market. So as we see decreases, I know your mom and dad are probably mad that they can't sell their house for as much, but as you as a home buyer, I'm going to say it's pretty good news all around. Yeah. The one thing that's out of your control is the job market and the way tariffs are working. So tariffs in this situation kind of drive up possible inflation, they're saying. But if inflation does drive up, it means interest rates have to go up to quell that inflation. So I would say this, rates are pretty plateaued right now. They're around 4%. You can get a refinance for 4.59, or you can buy a insured mortgage at 4.29 or 4.24.
414.
Or 414 some credit unions, right?
Yeah, those credit unions.
Just saying though, guys, you got to remember this. I've gone through a market where refinances were usually 50 beeps higher, not the closeness they were. I've gone through a market where I could give you 4.5 5-year fixed or 3.75 5-year variable. There's no spread right now in regards to the money. And when you see no spread happen, it means that they don't know how the market's going to react. They can't see the future of the market. The only thing right now we look at, and the huge indicator, and if you guys have watched videos on it, is the job creation right now. Job creation it matters. If there's not enough jobs created, they lower interest rates in order for jobs to be created. So if anything, the sucky part is, if you read that Canada's job creation market has lowered, we should celebrate because they're going to lower the interest rates. But if there's really good job creation, they'll increase those interest rates. I may be wrong, but this is what I've heard. We don't have Lister with us because Lister could probably correct this whole thing as well.
Yeah, he could.
Yeah, he could probably be in here telling me, Dunk, you're completely off.
Everything we need to know. I'm
going to suggest the one thing out of your situation here is interest rate. don't go by interest rate. Go by mortgage payment.
Yeah.
Can the mortgage payment be affordable to you? Sometimes it's a little higher right now. Know that when your mortgage comes due, you can go into a lower rate, but you also could go into a higher rate.
Yeah.
So,
but also keep too, like if you're just at home budgeting and you're trying to figure things out for yourself, keep in mind that you have a property tax payment. Property taxes are higher in certain areas, like LaSalle, Tecumseh are going to be higher than Windsor. And then also factor in that you need to have homeowners insurance. Factor in that you're going to have maybe a higher utility bill than the one that you have in your apartment that you're living in right now. You have a water bill to pay, like you're going to have a gas bill now. You're going to have internet there. Like you just try to factor in all the little costs when you're doing your budget, because a mortgage payment is important, but you want to make sure you still have enough budget for the other things that you enjoy.
Yeah,
life,
like I used to say, like Sasha's saying, he doesn't want to be buying you pizzas every Friday night. As soon as
every
you close
other
out your
Friday,
house.
I'm okay, but just not every
other
Friday.
It's not every Friday. So if you go too high on the mortgage payment, he'll buy you pizza, but every other Friday, not every Friday.
That's it.
Today's podcast brought to you by Armando's Pizza.
You owe us pizza now, Armando's.
They're dropping off pizza today. It's meat lovers, 2 salads, and a beautiful king with half cheese, half pepperoni. Thank you, Armando's, for the free pizza. I hope you guys, if you want a really good pizza, smooth cheese, amazing crust, Armando's Pizza.
Double sauce it up.
Yeah.
I love double sauce on
Armando's
Armando's
like this
pizza.
plug-in, man. I hope they
Right. We're going to have to take it to them and
Come
show
on,
them.
man. We'll eat it on the podcast for you, too. Okay?
And if you find this information helpful, like, share, smash that like button.
Smash the like.
I love when
guys?
people do that, but smash the like button, share it out, tell your friends about it. Hit us up if you have any questions. We're always here to help.
All right. And
Stay
then
classy,
30th
San Diego.
episode, last one of the season is probably in the next 2 weeks. We'll be having that aired out. Okay.
Yeah.
Thank you, guys. Have a good day.
Ladies and gentlemen borrowers, thanks for tuning in to the Mortgage Sweet Spot. If you have any suggestions for upcoming episodes or questions for our hosts, me and Sasha, throw them in the comments below.
And if you enjoyed the podcast, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, or you can check us out on YouTube. Once again, thank you for tuning in, and we'll see you on the next one.